You're listening to the #1 spot for markets and trading, Market Traders TV. Learn some shit.
Why is the second line instead of the first? Sorry, why is the second line instead of the first line? Oh, okay, sorry. It's actually here is what I said, and I said why here because okay. Throughout this move, there is one level that it fails. Here. It's what I call the retention failure. It basically means it failed to retain this and failed here, but it retained it here. So it's a failure from A to B. There's a thousand different names and there's a thousand different ways of playing these things, but these are a little abbreviation of a swing failure move. Funny thing is, this is actually a level as well in the current time scale. So, yeah, there, like I said, there's a thousand different names for it. Hey, just shoot me a message when you want to pump Bitcoin. So what do you think of looking at NQ to do now? I'm looking at NQ to go down here. But since I don't believe in double tops and double bottoms, the only thing I'll play is a failure move. What I mean by a failure move, by the way, guys, is basically short here or taking profits here with a stop loss literally right here. It's pretty tight. So that is a failure, right? Swing failure, whatever. There's a thousand different names. I'm just going to generalize it in terms of failure. The actual failure was this and this, right? This is what is called a retention failure, and this is a swing failure. So what that means is it failed from a support to a resistance here. This is a resistance fail, and this is a support fail. If they continue to fail at the support historically, like they did here, the probability is down. The fact that we actually went above it and now currently holding it means the highly likelihood in terms of this trend is up. The highly likelihood is up, but I'm still looking for a come down and testing these before that happens though. This is all probability game. This is all an algo probability game. Yeah, both are failures, right? One is a failure to go lower, fail to lose, whatever you want to call it. Failure to gain is another failure. Fails can happen in both sides. What indicator is at the bottom? This is just a volume. It's not really an indicator. Well, I guess you could count it as an indicator in a way. I don't necessarily use any indicators. I mean, I do have TTM below here, but I don't really use it. I don't really use it. I just use it as a... I know a lot of people like to look at it, so I have it on the chart, but I don't really use it. I just released another little cheeky nugget right there, and Spider was here to marker it. It's fine. It normally happens when you're looking at a range, upper range. So you have, okay. I'm gonna do a little fractal thing here. So most of the time, failures happen at the top range here, right? So price moves at the top range here. People go, oh, I'm going to buy here. It's held it so many times, and we're going to break out this trend, right? And this is a top range, right? Why is it a top range? Because, you know, it's a top range, you know, right? So until this happens, so obviously you don't know this. Let me just do it a little bit more better. Let me do it a little bit more better. So the most interesting thing is whenever something like this happens, there's got to be something on the left-hand side like this. If there isn't something on the left-hand side like this, it's much more interesting. So, and it's most likely there will be there's something on the left-hand side like this, or like this, right? Previous low or a failure. These are these fractally. These are there in the markets. What, 7, 8 out of 9? So 7, 8 out of 10s. The failure points where they fail is either at a high failure or a low failure. In terms of what I mean about low failure is support becomes resistance or a swing failure. As in a high range swing failure. It failed to swing above this range and failed at the lowest swing at the valley here. So yeah, I hope you guys understand. Yeah, I don't really, you know, I don't like to use like swing failure and all that bullshit because those are just words. If you look at it in terms of fractally, these are everywhere. It depends on time frame. These are everywhere. These are on to the downside as well, right? This one right here, right? These are everywhere. So the way you look at it is you look at it in two different ways. First of all, you have a range that you will trade at this high range. And this happens a lot, right? I don't have the statistics for it, but it happens a lot. So you have a high range it trades at. And this is a trap, right? This is a trap range. So the way people trap people is by doing, okay, oh no, it's a swing failure, so I'm going to do a short here, stop loss here. That's the trap. Oh, we're keeping this level, so I'm going to do a long here with a stop loss, you know, here or wherever, you know, and that's a trap. So the way to look at it or to trade it properly is to look at where it fails first, whether it fails to the downside or to the top side, right? So the way you trade is, okay, if it starts failing to the downside, what would you do? You don't short this. You short this. The stop loss above here. That is a proper swing failure trade. Because this is a failure, and that's the swing. Right? This, trading a short here is not a swing failure trade. Because this should be a failure before the swing. Right? Fail, swing, trade. This is something people get wrong all the time. This is like even in there's books I've read and they get this wrong all the time. Swing failure is after the failure. Okay, so the only way this can be a swing failure is if there is a level we held for so long and we managed to test below it, and this is the swing. Now this is a swing failure. But until that happens, it's not really a swing failure. People think anything, you know, that goes up and fails at the high is a swing failure, but it's not. There should be a failure before the swing. That's why it's called a swing failure. Anyway. Okay. It's at first the way I explained it is a little bit vague, and I did it for a vague reason because it's all dependent on price action. So don't expect it to be a fractal move. Expect it to be a price action move. And the people who have done the little cheeky little one-to-one with me have a little bit of a better understanding, because the swing failure happens at a certain point, at certain levels and at certain zones. Anyway, so it's a price action move, not a fractal move. I explained it as a fractal because it's much more easy to explain it as a fractal. So understand it as a price action move. So you got to look at gains and losses first. That's what I mean by price action. And then you quantify it by understanding what the bigger trend is. There you go. Okay, the bigger trend is down. The probability is down. That's how you quantify it. And then how you trade it is by using easier stop losses. So those are the three things you should think about. Okay. First of all, understand it's not a fractal move. It's a price action move. So the way you would understand it is by how it gains and loses levels. Okay. All these. So what I would want you to do as a little bit of a cheeky little homework is just Spider has recorded it, right? So there's no point for you to check back on the VODs. He's recorded it. Well, I guess he can pull it out a couple of days later. Anyway, he's going to pull it out a couple of days later. Listen to the things I've said. Look at the things I've said in terms of price action. So what I mean by that is you got to look at a couple of things as well. You got to look at momentum and price movement and failures. So that's what price action means, right? So the way you would expect momentum, this is a little bit harder to calculate, but the way you would look at momentum is by looking at how many people are interested in longing a certain zone. How many people are interested in trading a zone? Has the momentum shifted? There is 1,000 different indicators that you can use if you want to, but the way to analyze momentum and trend, especially at the failures, it's relatively simple. If you've seen it once, you'll keep seeing it. But other than that, it's quite hard to grasp at first, and I want you guys to do that first. I don't want you guys to just me to give you everything. Just do homework. Because at the end of the day, if I start spoon feeding you shit, then you're not gonna learn. So do your own homework about how to understand price action. You can Google it, YouTube it, and there's 1,000. There's even Dope's course. I think Dope explains it a little bit. There's 1,000 different things. Just go out there, do the grinding yourself, understand it, and then come back and go, okay, so how do I implement this in this trading scenario, or this trading pattern, or this trading whatever it may be. So, blah blah blah, right?
You're listening to the #1 spot for markets and trading, Market Traders TV. Learn some shit.